Hello everyone and welcome back. Hope you are all doing well. I'm joined today by Bret Kenwell. Bret, first of all, how you doing?
Doing pretty well, trying to get through the volatility here.
Yeah, well, I think that's one thing we're definitely going to discuss today. I suppose a lot of people listening to this would have experienced all different kind of emotions over the last week or so. So hopefully we can help you navigate through all of that, calm you down if you need it as well. So we'll discuss all of those things. But how's work going for you that side of the pond? All good?
Everything's going well, yeah. How about yourself?
Yeah, not bad, not bad. I was in Munich, God, a couple of weeks ago now.
Yeah, that looked fun.
Yeah, it was good fun. We had a client event there and a few speeches from Yoni, this kind of thing. There was a conference, but yeah, one of the evenings for the clients, I think they did it the year before, and they do it every September/October, is to go to Oktoberfest, which for anyone listening that has never gone or has half thought about it, I'd absolutely recommend it. It's really good fun. Just you're on these benches having a few beers, and it's just a sing song. It's like all the most popular old songs you can imagine. Bit of ABBA, bit of Sweet Caroline, and yeah, it's fantastic. Really recommend it. But yeah, no, that was good. So that's been my update for now. But it's good to be back on the podcast.
A few beers feels like an understatement with those mugs.
Yeah, I know. Do you know what? When I got there, because you're quite cramped in the
Yeah.
thing, I was thinking, right, I'm going to have one beer and I'm going to go home. And then 2 hours later, suddenly I've had a couple of those steins and, the songs are playing and we're all standing on the benches. I'm like, this is the best thing ever. So yeah, it was good fun. For anyone that's been to, and this will be more for the UK audience, but anyone that's been to the darts at Alexandra Palace, which is like the World Championship they have every December. It's basically that, but on steroids. It's just everyone having a good time drinking. There's loads of good food and rides as well if people are interested. So yeah, I would absolutely recommend that. And also, shout out to Will, who's part of the German team out there. He says he listens to us on his drive into work in the morning, so or afternoon, whenever it might be. So thank you everyone for tuning in. Brett, we've got a busy one today. We'll talk obviously about earnings season, which is kicking off. We'll discuss the volatility. I feel that is one of the most important things at the moment. I think people want to hear about, and then we've got something for the Swifties out there. We'll ask the question whether Taylor Swift can influence Disney share price. That sound good to you?
Sounds great. Let's do it.
Yeah, fantastic. Okay, well, let's start off with earnings season before we get into the volatility and all of that. I mean, how are you feeling as we get into it? Obviously, you've got the banks and all of that are reporting at the moment. Some have already done so. But what are you looking at? What are you most excited about as we get these reports?
Yeah, I think, when I look at earnings season, I'm excited for them. I mean, not only is it just like a fun period of the year we get, every quarter, but, it comes at a time where we're sort of digging for answers. We have the government shutdown, so we're not getting a lot of data. The market's looking through the shutdown as it typically does. That part I don't think is too surprising, but everyone is wondering like what's kind of going on the macro front, especially with, we have inflation moving higher, we have employment moving lower, and we're not really getting those updates the way we usually do. So, being able to turn our attention to earnings and listening to conference calls and what management's saying, I think is going to kind of fill that gap a little bit. And, I think back to April when, earnings season started then about middle of the month. So it was about a week after the S&P bottom, but the volatility was very high. There's a lot of uncertainty with tariffs. But management came out and said they were pretty reassuring. And I don't think intentionally reassuring, but, they just kind of came out and said, consumers remain resilient. They may care about the tariffs over the next month or two, but so far we're not seeing it. It's they're really pretty resilient. And then in the summer they came out and doubled down on that idea where they were confident about the consumer. They felt very strongly about where consumers were and the state of the health of the consumer. So, I'm looking forward to that update from the banks, the credit card companies, the retailers. They told a really powerful story in the summer, and I think that's been a key part of driving this bull market higher. So I want to hear that again this quarter as well.
Yeah, it's funny listening to you talk about quarter one and the earnings that obviously followed, which were quarter four. But talk about tariff worries, you talk about volatility worries. It's like, hang on, that's exactly what's now going on in the markets, and obviously we'll talk about that in a little bit more detail. But it felt like, and as you mentioned, the market did bottom before we got like the earnings from Nvidia, but it really felt like those Nvidia earnings that we had in the back end of April or the month after were like, okay, well, we're not going lower now. They were fine. They were good enough to keep sending us higher. And,
Sure.
then we have the earnings season just gone. And I think it was the best earnings season in 4 years or something like that. I saw when you look at it from sort of an EPS estimate kind of point of view. And, early on, the signs from the banks look pretty solid as well, I think. So good start so far. I mean, even this morning we talked about it in our analyst WhatsApp group. I don't know if you've seen it yet, where people were talking about LVMH and they had a good report, and I think their shares were up 12-13%. And quite interestingly, looking into the numbers, China looked a lot better than it had done. And actually, what you saw was a lot of similar companies, luxury brands that did well off the back of that. Like Montclair was up, Kering was up as well. Like, decent numbers. I'm just randomly got Montclair's chart up right in front of me. And, as it stands right now at the time of recording, they're up 6.5%. They haven't, reported today, but, all these companies that sort of filter into that luxury brand space have done well. So it'll be interesting to see once we get into the meat of it and get those big tech earnings. Sometimes it can be the case, can't it, Brett, where you get one company that reports well and everything sort of rolls with it. So I think that'll be something people will keep an eye on. But I suppose really what's going to make or break one way or the other is going to be what happens with Nvidia. At the back end of the earnings season, always one of the last companies to report. So we have a bad couple of weeks. Nvidia's good. The market's great. We have a good one, and Nvidia's bad, then the market goes down. It's just the way it is now. It's the biggest company in the world, isn't it?
Yeah, yeah, by far. And we won't hear from them for a while, but we'll hear from the other, six of the Mag Sevens by the end of this month, early November. So we'll get a pretty good idea of what. And I think even just seeing all the headlines and the partnerships and the deals that are being announced within the AI space, we're already getting a sense that I don't think these companies are slowing down on their AI investments. So I think in that sense, we kind of know that theme's alive and well, but it'll be good to get an update from them. Obviously, they're a huge driver.
Yeah, big time. I'm sure many people at home use Finviz, Finviz. They got like a page on their website where it shows all the earnings dates. Nvidia actually haven't, I don't think, confirmed a date yet, but some of those big companies who got on the 29th, so 2 weeks time, got Microsoft and Google and Meta all on the same day. They'll all be after the market closes. The next day, so 2 Thursdays, well, 3 Thursdays time, I guess, you've got Apple. The 22nd, you've got Tesla as well. So once we get into the back end of October, you're getting some big companies that are reporting. So we'll keep a watch on that. I don't know if you remember, and I imagine it was probably like maybe a month ago, maybe even more. The days just kind of roll into one at the moment, where Trump was like, he's gonna try to push to give the choice to CEOs and companies that they don't have to report earnings every quarter, that they should actually maybe decide to do it semi-annually if they want to. And it sparked up a bit of debate. I've always been of the view that I would mind that. But it's quite interesting. I was looking on X at the time, and a few people in the comments to a tweet were saying how, I've worked for a few public companies, and the problem is when it's quarterly, you've got people just working for that quarter to try to get the results well, where they're not thinking about the big picture. So I wonder if that was to get pushed through, and I have to say I don't know the update on that, how it could change things potentially. But just purely yes or no answer, if it was completely down to you, are you happy with it being every quarter, or would you not be against semi-annually?
I mean, a yes or no answer. Yes, I'm happy with it being quarterly. But to be honest, I mean, I can see the upside of doing it every 6 months instead of every three. The main one being not the costs associated with doing and putting on an earnings report, but more so allowing the management teams to have a little bit longer term vision. Operating on a 3 month schedule necessarily isn't the most conducive to like the long term benefit of the business and its shareholders. So from that perspective, I think 6 months is okay. But I understand the pushback in terms of the transparency and what that means for shareholders, to get the number of updates cut in half.
Yeah, yeah. I suppose it really does sort of spark that debate. But I guess if they gave them the choice, it'd be interesting to see how many would switch it up. Let us know actually if you're listening to this, watching it, whether you would prefer that or not. I think I did a poll for a webinar we did a few weeks ago where I was doing it with Lale, and it was pretty much split down the middle whether people would be okay with it one way or another. If not, I think more people were happy with it being quarterly. But yeah, big earnings season ahead. I remember reading a few reports a couple of months ago, funny enough, that they thought this earnings season was going to be the one that would lead to the market topping. I wonder if they've changed their mind. But on a separate note, I've had friends that have just been in Vegas, and actually, funny enough, Josh, who a lot of our listeners
Yeah.
will know as well, is about to head to Vegas now. But my friends that have been there, they were saying, and the two of my mates that went, they were there on a stag do. I went with them, 2 Julys ago and then 3 Julys ago, and they were saying it's so much more expensive. And they were speaking to the hotel staff, the bar staff, and people around, and they're saying it's because of the tariffs, right? Everything, and they were saying it's noticeable just how much more expensive it is just in just over a year. And I wonder whether where we've seen so much sort of front loading of that we start to see that impact now or not. We'll have to wait and see, but maybe food for thought there. Um, Earnings will bring volatility for sure. I suppose it's probably a good point just to make for anyone completely new to the market. Don't feel like you have to get involved before an earnings season, an earnings report. Don't feel like you have to get involved straight away after. There's no pressure. The markets will always be here tomorrow. So, be patient, have a plan, and you've got all the virtual portfolios out there. But let's talk about volatility then. And I suppose, well, the most recent spat of it really began at the back end of last week. I mean, in terms of percentage moves, crypto's been by far the most volatile, but equity markets certainly have been affected too.
Yeah, definitely. I mean, I think we got to this period, like I was kind of looking back through Q3 and looking just like at the S&P, we only had 4 sessions where the index moved more than 1%, and only one of those days was on the downside. So like Q3 was so quiet, especially given like all the volatility we had in the end of Q1 and then the beginning of Q2. Q3 was just like a snoozer in probably a good way, but I think in a lot of ways investors were, I mean, just go like scroll through social media. People are like wanting a pullback, waiting for this
Yeah.
pullback. And, I don't know, I don't think no one knew it was going to come from this, but, I kind of in a way just feel like it was the excuse the market needed to pull back. And, there was some like deleveraging things going on and some unwinding of like big positions in volatile names. I think we kind of saw that in crypto, and then we saw that in some like portions of the equity market. But I think Friday's kind of served as a wake up call. I think S&P was down like almost 3%. NASDAQ was down more than 3. Just kind of served as a wake up call, I think, for investors to be, mindful of their portfolios and what they're investing in and what type of like margin or leverage they're using, whether it's like direct portfolio margin or something like through a derivative like options or futures. When that flip switches, things can move really quickly. I mean, I even remember a Friday morning, like I woke up and I saw the market open and I was like, oh, it's a good open. We hit all-time highs. And then I
Yeah.
went like heads down for 2 hours into just doing some like research. And I looked back up and we were getting killed. So it was like, it happened so quick. But I don't know. I mean, I think it served as a wake up call more than anything. What are your thoughts? What do you think about it?
Yeah, I mean, there's a saying, I don't know who created it, but I'm sure everyone involved in markets for a while has heard it, where it's like the stairs up and the elevator down. It always seems that things come
Definitely.
down a lot quicker, don't they? And I think what you said at the beginning, and that sort of reminder, that wake up call is exactly that. And it also just goes to show the power of, comments and, posts from Trump on, social media, Truth Social. You've got to be aware of that, especially if you're an intraday trader, because they're moving the markets. I mean, even if we look at yesterday's move, or overnight move where we're now 1% away from the all-time high, some dovish comments from Jerome Powell. You've got to be aware of when certain central bank speakers are speaking or when people in power have certain meetings, because that's what's going to move the market. And at a time where, like you said earlier, you're not getting the inflation number, you're not getting the jobs report because of the shutdown. These things are maybe a little bit more important, but the move, it's a tough one because some people were like, "Oh, massive shock, crypto drop like that." And I'm like, if you've been involved in crypto for a while, it should. I mean, it shouldn't be a shock. That's not to say it wasn't a massive move, because it was. I mean, some of the altcoins were down 50, 60, 70, 80%. That's massive.
Yeah,
But these big moves out of nowhere, obviously it did come from somewhere, aren't, it shouldn't necessarily shock people too much. It just goes to show that a lot of people were over leveraged. I mean, you can have a podcast all day about whether there's manipulation going on here, where people have
sure.
sold, gone short Bitcoin, 20 minutes before these announcements and the big sales and all of this. And that stuff probably does happen across all markets. But, for a lot of people, I know there were some that had like resting limit orders in lower down. And, obviously the market could have kept going lower for sure. But those people that bought the dip have done quite well. So it was an interesting one in the way that you had the headlines, market selling off. You're thinking, okay, well, SPOOs and the Nasdaq, they're all going to gap lower, and then another headline comes out where it's like, well, we still might have a meeting, and then Trump's like, what did he say? Oh, President Xi just had a bad moment, and actually everything's okay, and the market's up, and you think, oh, that's the end of it now. On we go and on we go. But we had a couple of nervy days to begin the week, so it does feel like, whilst I think people would still be overall bullish, it is a bit of a wake up call, as you said, and it does kind of just feel like that. But while we aren't getting the data, as we mentioned, the inflation numbers and all of that, earnings and comments seem to be sort of the main thing for now, don't they?
Yeah, and I have I have an old trader friend who used to be traded on the floors in the futures pit, and he would call days like this or periods like this like water in the bathtub. Just meaning like sloshing back and forth. You get
Yeah,
like Friday, we had the big move down that created the ripple, and then like you guys mentioned, Monday morning markets gap up. Tuesday they gap back down on China retaliation. Then they
yeah,
gap up to this morning. I'm not sure when this will publish, but Wednesday morning they gap up. So it's just like back and forth. It's just like sloshing. I don't know. It'd be a question. I think volatility is back for the moment. I think it's a good question, and no one knows the answer, I guess. But how long will it last, sort of thing? And earnings season, I think, can maybe go a long way to either exacerbating that or steadying the ship. So it'll be an interesting couple of weeks for sure.
yeah, it will. And I maybe again a little bit of advice for anyone looking to navigate it. October has, month wise is one of the most volatile, if not the most, I think, historically. But there's no harm in sitting in your hands. As you said, it's Wednesday today, morning for you, afternoon for me. There's no harm in saying, well, let's just see where we close Friday. What does the market decide? Because you've had that volatility in between all things. I mean, the S&P broke 6,600 to the downside yesterday on the comments between sort of China and US, and then recovered overnight with the Jerome Powell stuff. It's volatile. There's no harm in saying, okay, let's just see where we are at the end of the week and what everyone else is thinking. You don't need to rush into a decision, especially if you're a long-term investor. But yeah, certainly for many out there, it's been an interesting few days, and I think this is one of the reasons why I love this job. Talking about markets, because they just change all the time. There's always a new thing to talk about, and at the moment, the moves that we had since Friday are definitely that. But yeah, interesting times.
Yeah, certainly. I think it's also a good reminder that volatility cuts both ways. We've
Yeah.
seen the big moves down clearly, but we've also seen them higher. So, sometimes with investors, I think, especially, newer novice investors get caught up in the trying to do too much when things speed up like this. And sometimes it's best to slow down and just kind of let things settle before you start picking your spots a little more carefully.
Yeah, and also, we're in a bull market. There's been plenty of bull markets that have lasted longer than this. So it's not going to be without those little pullbacks. And I speak from a very selfish point of view of being a long-term investor for, things like the SPY or whatever, I wouldn't be against a little bit more of a pullback at times. So it's healthy. It's not the end of the world. It certainly doesn't feel like that. And as I said, we just came off one of the best earnings seasons in a while. Banks looked good yesterday. Fed are going to lower interest rates again. There's a lot of positive things for markets out there. I guess you can draw up the narrative any which way, and you can say, well, why is gold still smashing higher? Is that not a worry? And of course, things like that can come into the question. But yeah, for now, I think the market is rightly positioned, still near those highs. One market I wanted to talk about, and I mentioned it at the beginning of the program, was Disney, but only because of Taylor Swift.
Sure.
First question, Brett, are you a Swiftie? Are you a big fan?
I'm not, but I have nothing against her though. It's just not my cup of tea.
Yeah, no, I'm the same. I'm the same. Although I was one of the people I was in Munich with. She works in our London office, and she says someone we were talking about Taylor Swift. She goes, when people ask her what music she likes, obviously, common responses to that question would be like, well, I like country music, I like R&B, I like hip hop. She says, I like Taylor Swift. And that's all she listens to. So yeah, the headline ran on the week at the beginning of the week that she's going to be doing a new program in December for Disney. And when I saw this, I just thought, you know, how much impact could that have, and when have we seen sort of similar things and whatnot? Because Disney made its all-time high. I think people will probably remember this back in 2021, but then it really since then dropped off a cliff. I mean, it dropped down 62%, I think it was, if my screen is correct. It's recovered a bit in the last sort of couple of months. I mean, the low from March to the most recent high, it made 56% up, so it's pushing nicely up, albeit it still would have to push another 84% to get back to its high. But I was thinking about this sort of celebrity influence. I mean, people will remember the campaign American Eagle did with Sydney Sweeney, and it gapped higher the next day. I think I'm just going to get the chart up now just to get the figures correct. From the headline dropping to the high of the year, it went up 50%. It has since come a little bit lower from that, but it just goes to show how these big influencers, big celebrities can move markets. So it'll be interesting to see how well just a single program does, because I was also thinking about Netflix, right? And for a lot of people, they've now become fans of Formula One just because of Drive to Survive. So
Yeah.
could it get more people joining Disney? Potentially. I mean, you'll have to wait to see the impact of that. But also, I was looking through, some negative impacts from celebrity endorsements, if you like. And football fans will remember, back in Euro 2021, it was delayed a year. Ronaldo moved a bottle of Coke from his. He was doing a post-match interview, moved it out of the way, like kind of like, oh, I'm Cristiano Ronaldo, I don't drink Coke. And the share price went lower. It was later debunked because the markets were already lower over the weekend. But things like that can absolutely move markets. You've seen over the years Kylie Jenner, big Kardashian fan myself, talk negatively about Snapchat, saying she no longer uses it, and then it led to a 6.1% drop just over the next sort of couple of days. That's a $1.3 billion loss in market value. You've had Elon Musk tweeting recently about cancel your Netflix subscriptions. They lost a few percent in share price, and people in power talking about, like, Trump talking about Boeing as well. There's plenty of examples where people sort of talk positively or negatively about companies or done big partnerships, and it absolutely does move things. I guess question for investors is, how long does this last? So if we take the most recent other example of the Sydney Sweeney thing, American Eagle is up, but let's see how they do in the next sort of couple of earnings. So you want to see proof in the pudding. And also remember, this isn't Taylor Swift endorsing Disney. She's just got a new show on there. So again, you want to see how much that impact actually has. But yeah, marketing has just become such a big influence in the world, and it goes back to what we said earlier, Brett, about how comments from central bank speakers, from politicians move markets, but also just celebrities, right?
Yeah, I mean, I think it really speaks to the power of social media. And it
Yeah,
goes back to even what you were saying earlier on the volatility with just one tweet from Trump can move the entire markets. I mean, it's trillions of dollars like is can slosh around on a headline or a tweet. So, and I think the Sydney Sweeney thing was also a good comp. You know, I don't know. It would be interesting to see how it influences Disney. I mean, you have somebody who is arguably like the Nvidia of the music
yeah.
world. I don't know if that's
Mhm.
a weird way to put it, but
I like it.
like Taylor's such a powerful force within that, with I mean around the world, but specifically within her industry. So, I mean, from a shareholder's perspective, you have to look at this as a positive.
Yeah,
You know, but I think kind of like going to the Sydney Sweeney thing specifically, you know, the news was positive and the stock reacted in kind, but then when the company reported earnings, they came out and said this has been our most successful, you know, marketing launch or marketing. I can't think of the word off the top of my head, but like
launches,
campaign,
campaign. Yeah,
marketing campaign that we've ever had, where the our orders are stronger, our you know like all the tangible numbers were improving as a result of it. That's what got shareholders excited with the follow through. So if something like with the Taylor series can be a needle mover for Disney, then that's what can move the stock. It's the news is great, but they have to see the follow through to really, I think, kind of jumpstart that stock and you know hopefully get it moving back in the right direction. Because as you pointed out, it's been a rough couple of years for the shareholders.
yeah, it has. It has knocking on the door of sort of key resistance right now. I'm sure anyone who sort of
Yes.
looks at the chart will see that. So yeah, that'd be one to watch. But yeah, more people sign up, more people watch it, and there's future programs and all of this kind of stuff. It's a net positive, but the proof has to be in the pudding, I would say. But look, we'll wrap it up there. Talking about the Nvidia of the music world. I love that reference, by the way. But Brett, as always, it's great to have you on, mate.
Yeah, yeah. Thank you. It's always fun to come on chat.
Nice one, guys. Take care and have a great rest of your week.